Hello, everybody. Today is day 25 of my 30-30 challenge, and I am so excited to be at day 25. That means I'm almost done, but not to worry. There are great questions coming in the next few days, so hang in there with me until the end. So today I'm talking about taxes, and I'm going to talk to you about two different taxes. The first one is property tax, annual property taxes. It's called EP here in the Dominican Republic, and how that tax works is the first 7.5 million pesos are not taxable. So the first 7.5 million pesos of value for your property is not taxable. And that runs about $140,000. Sounds like a lot, doesn't it? Like 7.5 million? But the dollar is strong against the peso. So actually it turns out to be about $140,000 more or less. And any property value below that amount is actually not taxable. The tax is actually called a luxury tax here in the DR. So any property over about that amount is considered a luxury property, and the tax office taxes you at the rate of 1% of the value that exceeds that amount. So let me give you an example. You're buying a property that costs $200,000. Okay, so the first $140,000 more or less is exempt from taxation forever. And that $60,000 difference, you pay taxes at a rate of 1%. So at the end of the day, you're paying $600 a year for your taxes. And every year that amount is adjusted. So it will stay around that amount. Like every year it's adjusted. When I first got here, I think it was somewhere around 100,000, and now it's 140. And in the future, it'll be up to 150, 60, 70, what have you. Every year in January, they adjust that rate. And so now I'd like to give you a little bit of information about another tax, and that is the land transfer tax. And what is that tax? That tax is a one-time tax that you pay to transfer the title from the previous owner's name to your name or to your company or whatever entity that you will have to buy the property. One-time fee that is 3% paid to the title office upon closing. So if you're buying pre-construction, you don't pay that until you're receiving your keys and your title at the end of the day, and it is wrapped into your closing costs, which run you maximum around 5%. So about 3% of that is that tax. So that gives you a little bit of information about taxes in the DR. It's really not that bad. The tax rates are really good here, and you get a lot for your money. So stay tuned tomorrow for the next episode of my 30-30 challenge. This wraps up day 25, and I'll see you tomorrow.